politically independent think tank based in Paris, France. And I'm very pleased to co-host, I should say, this event with our friends and partners from Positive Money Europe. Vicky Van Eyck is with us today, and Vicky will moderate our session. I just just make a very short introduction, starting by excusing the team for the small delay, and we had some technical problems. Some panelists have technical problems with accessing to the panel, but I'm sure they will join us in a minute. So we'll just start, and as a very short introduction, we have a very rich panel today, and I let Vicky to present the panelists in a moment. I just take a minute to explain why we organize this event and why we are very pleased to have all those panelists with us today. Vicky will explain what Positive Money Europe does on this front, but at Veblen Institute we run a program on monetary and financial reforms, and last year we launched a digital Euro Watch, which is basically a network for research scholars and experts and civil society actors to discuss this topic, because we found there was this was a very important potential reform of the European monetary system, but there was no real space to discuss it in a transdisciplinary way where experts and institutions and civil society could discuss these things. So in the beginning of this year, we published the first report, and we have the lead author of that report with us as panelists today, Tristan Dissaux. But the panel is, and this roundtable is not about the report, although I'm sure Tristan will come back to it. We basically wanted to ask the panel about their opinion on four main issues, which are for us key issues with the digital euro. As you know, the European Central Bank runs an investigation phase currently, and we don't know what this phase will lead up to, but we do know that the central digital euro is not the only project of a central digital currency in Europe, and indeed in the world. It's a main trend throughout the world. So in any event, it's very important to discuss what this project is about and what this will lead to or not lead to. So we ask our 4 or 5 panelists to give their opinion about 4 issues that we presented in the invitation, 4 aspects of our issue, which is the inclusiveness. So can the future digital euro guarantee universal access to digital money? The fair cost for users, and it's not only the overall cost for payment system, but also the equity aspect of this. The privacy and the resilience of the payment system. The resilience meaning can the digital euro improve the reliability of the payment system in case of extreme events? So these are the four issues that we found very vital to discuss as the project is being prepared, because the main point, I think, of the report and also of our message at the Digital Euro Watch is that there is a strong link between the technical choices, the design options, and what the future digital euro will or will not be able to do. So with this short introduction, I leave to Vicky to present the panelists, and Tristan later on will present the typology that we sort of sketched out in the report about different design options. Vicky, I hope that our panelists are with us, and I let you present also positive money and start the discussion.
Yes, thank you, Wojtek. Hi, and welcome everyone to this policy roundtable on the digital euro. Our sincerest apologies for the delay. I'm very happy to see all the panelists are here, well and safe. So my name is Vicky Van Eyck. I'm the Executive Director at Positive Money Europe. I'll be your co-host and moderator for today's discussion, where we will hear from our panel of policymakers, but also civil society stakeholders on the digital euro project, who I will introduce in a moment. So very briefly, a few words about Positive Money. We are an international nonprofit research and campaign organization that works towards a money and banking system that enables a fair, sustainable, and democratic economy. So we've been following specifically debate on the digital euro since 2018, and we see it as our role to bring the public and society's interest to the fore of public debates on central bank digital currencies, together with other civil society members, such as the Veblen Institut and also Banque, the consumer organization. So this brings us to today's topic of the roundtable. Will the digital euro make our money system better? And on that note, I would like to present the 5 speakers today who are very well placed to tell us at what stages of the digital euro project we are today and where it is heading, or perhaps where it should be heading. So first, we have Evelien Witlox. So Evelien is the Digital Euro Program Director at the European Central Bank and the former Global Director of Payments for ING and board member of the European Payments Councils. Next, we have Jan Ceyssens. So Jan is the head of the Digital Finance Unit for the Directorate General for Financial Stability, Financial Services and Capital Markets Union, quite a mouthful, at the European Commission. And this is the unit that is jointly responsible for the proposal on the digital euro with the DG for Economic and Financial Affairs and also DG Connect. Next, we have Paul Tang. So Paul is a member of the European Parliament for the Dutch Partij van de Arbeid as part of the group of Socialists and Democrats. He is also a member of the Parliament's Committee on Economic and Monetary Affairs, and his priorities include the fight against tax evasion, digital taxation, sustainable finance, platform regulation, and of course, the digital euro. Next, we have Anna Martin. Anna is the Financial Services Officer at the European Consumer Organization, Banque. She is also a member of the Rulebook Development Group. And as the name implies, this is a group that is developing a rulebook for a digital euro scheme based on the ECB's Governing Council's decisions on the design of the digital euro. And last but not least, we have Tristan Dissaux. Tristan is a researcher at the University Libre de Bruxelles and is the coordinator of the Digital Euro Watch at Veblen Institute and co-author of Veblen Institute's most recent report on the digital euro. Just to give you a quick recap of what the session today will look like, we will start today with 10-minute presentations from each of the panelists on which design options they and their institutions think are the best to improve our money system. We will then have a second round of contributions with questions from myself. And after that, we will open the floor to questions from the public for the last 15 minutes of the roundtable. We're running a bit of a delay, but I will ensure that you get your questions in there. A couple of housekeeping rules before I stop talking. We encourage participants to use the Q&A function in Zoom to ask questions throughout the presentations and the discussion with panelists. These will be addressed at the end, as I said, in the last 20 to 15 minutes. And there are also 2 things that you can do as participants to make my life as a moderator easier. First, thanks to the democratic design features of Zoom, you can upvote a question in the Q&A that you like and think is important, which makes it easier for me to prioritize them. And second, it would also be helpful to specify to whom your question is addressed so that I don't need to guess it. Now, I've finally stopped speaking and handed over to our first speaker for today, Evelien. Evelien, in this phase of the investigation of the ECB on the digital euro, which design features is it leaning towards in its effort to improve the money system? I give the floor to you.
Thank you very much. It's a pleasure to be here and to talk on the digital euro and where we are today. So let me do one step back. So why are we doing it and where are you coming from? So as I don't have to tell you, but we live in a time where almost every area of life is becoming digital, and that's including the people's payment preferences. If we think about the digital euro, it would be a pan-European payment solution that should be accessible and functional throughout the entire euro area, which currently doesn't exist. So Considering the decline of cash or the use of cash as a means of payment, the digital euro would ensure that access to central bank money in a digital age will continue to be there and will continue to provide a monetary anchor for the financial system. Of course, cash will continue to be available, but in order to ensure that our currency remains future-proof and fit for purpose, we need also to adjust it to people's changing payment preferences. A digital euro would be designed to make our lives easier when we pay, so it would offer users more freedom of choice. They would be able to pay with a secure solution that fully respects their privacy, because the central bank has no interest in people's payment patterns. While the digital euro payments cannot be fully anonymous, we should strive for the highest possible privacy standards in line with Europe's ambition to be a standard setting when it comes to data protection. But it's up to the European legislators to strike the right balance between privacy on the one hand and traceability that we will need to implement in the design of a digital euro. Digital euro will of course be designed to be inclusive and take on board people without access to a bank account and have low digital or financial skills, as well as people with disabilities. The digital euro level of inclusivity will also depend on the legislative framework to be adopted by the European co-legislators. For example, when it comes to easy access to digital euro. The ECB proposes a digital euro that would support inclusiveness by being widely accessible throughout the euro area to ensure that the digital euro meets the expectations of consumers and merchants. It should be usable both via mobile app and physical payment card for those who don't own digital devices, free for basic use for citizens, as private as possible in line with the legislative framework, available offline, anticipating situations of limited connectivity, and customizable, allowing users to define their preferred settings for account limits, for example, and automatic functions. Supervised intermediaries, banks, as well as non-banks will play a key role in the distribution of a digital euro. In our regular exchanges with consumer organizations and merchants, they have remarked that the best way to ensure broad access to consumers would be to require payment service providers to make the digital euro available to their customers. A digital euro will be free for basic use by private individuals. This is vital, we believe, for a digital euro and resembles citizens' experiences with cash. Simultaneously, supervised intermediaries should be offered economic incentives to distribute encourage a digital euro distribution, as they are currently doing for other electronic means of payments. In this regard, we believe that payment service providers would be able to charge merchants for their digital euro payments as determined by market forces. This principle would ensure that the fees for merchants cannot exceed and should preferably be lower than the current levels for comparable means of payments. A wide digital euro distribution would allow for a more open and competitive space, providing the platform for the private sector to develop further innovation in Europe. Overall, we believe that a digital euro would ensure Europe's monetary sovereignty and make our payment system more resilient, thereby supporting Europe's strategic autonomy by providing a European payment solution under European governance. We are currently approaching the end already of the investigation phase of the project. We have recently published our third set of foundational design options that was endorsed by the Governing Council, which includes, for example, a distribution model via payment service providers and advanced functionalities. These findings will feed into the high-level design of a digital euro that we will present shortly, and which will also support the ECB's Governing Council when deciding on the future of the project, which will take place in autumn. And with that, I will stop here and would be open at a later stage to answer any question you might have. Thank you.
Thank you, Evelien, for giving us insights into where the ECB is at on the digital euro and some of the design features that's leaning towards and what it's leaving to the EU legislators. So talking about EU legislators, let's move to Jan Ceyssens. Jan, the Commission is set to come out with a proposal on the digital euro towards the end of June. What are some of the things we can expect to see in that proposal in terms of design choices that will improve our money system? The floor is yours.
Thanks very much also for organizing this discussion today. Maybe before I start, I need a couple of points on also the role of the European Commission here. Indeed, I think first of all, we are really grateful that the ECB has done so much work on the digital euro to explore this issue and really this idea of making, let's say, public money fit for the digital age. I think some people have asked, well, are the central banks not running far ahead? Well, I think not at all. This is the way the digital age works. You can't just talk about things. You need to think them through. You need to try them, and you need to experiment. And only then you will really understand what the challenges are. And I think that's exactly what the ECB has been doing now for a long time already. From our side, we have also early on started to kind of work together and closely with the ECB to check a bit what are a bit the regulatory implications here, and our role is really now, as you also indeed highlighted, our role, Vicky, is really now to make a legislative proposal for a regulatory framework, which then would be required and needed actually if it's ever decided actually to issue a digital euro. Everything, of course, which is happening now are preparations, and this is a big project, so probably there will still remain preparations for a long time. But if at some point indeed it's decided, yes, we really need this and we want to put it in practice, that can only happen once the legislator has actually given, let's say, it's not and it's okay to that. And our role is here really now to prepare a proposal which actually would technically be sound and which allow then the co-legislator and Paul and his colleagues will, I think, have already been very active and will even be more active on it, basically, would really then allow the legislator to, let's say, to establish a digital euro, to decide on the yes or no, and to decide on, well, what's the basic direction of travel on this. So much about our role here in a way, really to provide a proposal only for the regulatory framework and the key choices. Now, maybe coming a bit to the various points, the 4 points which you have put on the agenda or suggested for discussion today. I think it's really important to start the discussion from what you want to achieve, and I think Evelien has already made the different points and mentioned them indeed. Why would we need a digital euro? Certainly not to tell people not to use cash anymore. So people want, and they should actually remain in charge on deciding if they want to live with cash only, if they want to have nothing to do with digital payments. That's the legitimate right of everybody actually to do that. I think we do see, however, more and more people who are going digital, and we do see more and more, let's say, modes of purchasing goods or interacting in the economy where you can't really pay with cash anymore. E-commerce, I think, is the clearest example. And so, let's say, from the citizens' perspective, it's really important for us that, let's say, there is a possibility to also use public money in this increasingly digitalized economy if citizens want to go there. So those who want to continue using cash, they should be able to do that. There's nothing wrong about it, basically. Those who actually are moving already in the digital age, our generation, maybe the generation of even our kids or their kids, basically, they should have also the choice, as we have today, to use actually public money. And that's, I think, important for of course, let's say, broader financial stability reasons, because this is really also public money is really the base of confidence and trust in ultimately our monetary and financial system. It's important, and you mentioned both of them already, of course, also for Europe's open strategic autonomy. But it's really also important, I think, for citizens and their daily life and their way they proceed, they make payments and they use actually them. And the possibility also in the digital age, indeed, to know that you have a payment means which you can use really everywhere in Europe. Like is the case today with the euro, that can work wherever you are, that everybody accepts, basically, like indeed is the case of cash today. And I think all the items you put on the agenda for today really relate. One can really use it as a starting point, as a benchmark. It may be a bit, let's say, of course, the situation on cash. And I think then the digital euro should aim to, let's say, have similar features, see what are the added values, and maybe even go beyond that. And let me go take them one by one. On inclusiveness, of course, let's say cash. Everybody can take it in Europe. Everybody can access it. Actually, you don't need to do formalities before, etc. Now, that's ideally also an objective for the digital euro. It's not as simple as that to receive a digital, let's say, right or a digital value. You need to have a wallet, or you need to have something digital to receive it. Basically, I, as a citizen, as a physical person, I cannot receive a digital, let's say, euro, because I'm not a digital object, basically. So I mean, you will need to be in one way or another onboarded to the system to even, that's in the nature of a digital system, which makes it also different from cash, for example. And I think the objective here then needs to be that this onboarding is as easy as possible, as simple as possible. And that can work via banks, that can work via other channels. You know, for example, we have this payment accounts directive in Europe, actually, where it's also a bit up to the member states, depending on the local, let's say, situation, to see indeed what is the most appropriate way of people to actually get access to payment accounts. And I think that's an interesting approach. Then I think the second point which you mentioned is indeed the fair cost for users. Again, if I go today in the shop and I pay with cash, I don't really have any cost with that. I think the objective for the digital euro should be a very similar one. If you transact with the digital euro, you do the basic uses actually, which citizens do. Indeed, there should not be a particular actually cost tackled to it. Of course, nothing is free in life, basically. So also for cash, somebody bears the costs. And I think then we need to see, when you look at the side of the merchants, basically, we'll need to see that the framework overall makes sure that people are not overcharged on this side, that the costs are fairly distributed. But for the end user, it should really be, the basic users should really be free, I guess. I think the third element you mentioned is the data protection. Again, cash is, well, it is not anonymous. If you want to get it from your bank, or if you want to put back money to the bank, you will need to have an account, for example, and there will be some data traces, but it is relatively close to anonymity. And we certainly, let's say, think, and that again will be a difficult choice for the legislator, but it's very clear we don't want to go in a direction as other jurisdictions are doing, where maybe CBDC, central bank digital currency, can be seen as a mechanism of surveillance. I think if Europe establishes a digital euro, it should really be a mechanism and a symbol also of data protection, as much as Europe with the GDPR has really taken the global lead indeed to establish a gold standard of data protection. And in that sense, basically, I think there are quite a number of promising features which the digital euro can support. For example, if there's the possibility also for offline use of the digital euro, indeed, that is just one example where that also technical features can support then very high private degrees of privacy. The only point of caution I want to make here is that, of course, privacy and data protection is not a one-way street. In a way, we also know the flip side of the coin is money laundering, and if you have a fully private financial system, you can't combat money laundering. So I think that at some point is, let's say, a balance which the legislator will have to strike. But from our perspective, it is important that on this kind of balance, the data protection plays a very strong role. And last but not least, indeed, the resilience. Well, cash, I think, unless you're in a fire, basically, you can really use it everywhere. You don't need internet connection. You even in a conflict situation or in a natural disaster, basically, you can use it. That's what you refer to. Again, I think something digital is a bit different. Basically, you need some digital kind of equipment to actually transact with it. But again, the objective should be to make that as resilient as possible. And indeed, let's say, for example, through ways of offline payments or other means, other technologies, actually, to make sure that really the system is as resilient as possible. I would want to add that indeed also the very fact of having actually a public, let's say, system, a public digital money in the system, which indeed where the resilience and the system are guaranteed actually by the central bank itself, is also an additional, strengthens our resilience in an additional manner compared to relying indeed just on the systems which are established by a number of private operators. So I think here again, the digital euro can actually provide quite some, if properly designed, quite some positive features, which especially in today's situation will be quite relevant. So those are just some remarks and reflections on the 4 points which you made. Overall, however, what I want to stress again is that from the Commission side, I think we are not, of course, doing the detailed design, technical design of a digital euro. That is, I think, something which the ECB is in charge of. And we will ultimately not take the policy choices either. We will make proposals actually, and then it will be up to Paul Tang and his colleagues actually to decide where they want to put the marker basically.
Thank you, Jan. And indeed, you mentioned cash as a baseline, and there will also be a parallel proposal on cash as legal tender coming out at the same time as a proposal on the digital euro. So that's also something to look out for towards the end of June. So moving on to Anna Martin, let's hear your insights from what consumers think are important for a successful digital euro and for them to use it. Handing over to you.
Yeah, thank you very much, Vicky. Indeed, it's many topics which we just mentioned actually are really the added value, or what we would see as the added value for consumers in a digital euro. So indeed, our starting point, as for the previous speakers, indeed, is actually cash. We look very closely on the developments of cash because that's for the time being still the payment method which works for everyone, which everyone can use. But we see a strong development towards cashless societies. Of course, there are strong divergences across countries, but when you look at countries like Norway or the Netherlands, where we are having moved already quite a lot towards a cashless society, there are increasing calls for getting back to cash, or who have additional measures for financial inclusion. And I want to come back to actually 2 studies which have been recently released. One is from the Dutch National Bank and one is from the Norwegian Consumer Council, which is one of Banque member. And these studies show that roughly one in 6 out of 6 adults has a problem with paying digitally. So we have a lot of people. It's not just like 5% or this kind of thing. It's really much more who have a problem to only pay digitally when they go in public transport, when they use essential services like healthcare, when they want to shop in their closest small shops, groceries, and all this. So we really have a problem in terms of financial inclusion and digital inclusion when we go to a cashless society. And we need to solve this, because otherwise these people are losing their independence in terms of really daily tasks they want to do. We almost pay daily for things for essential services. So we really need a solution here. And that's for us really one of the key starting points for the digital euro, where we believe that the digital euro must bring a public digital payment method which can pursue this public objective in another way that it could be pursued by private intermediaries, by commercial banks. Because in the end, if you have a public institution taking care of this payment method, you don't have this conflict of interest as you would have with an institution who is very keen on making a lot of benefit out of a payment method. So for us, really the starting point is that we get something which is different than the business as usual digital payment method. And so we need a solution for financial inclusion. What do I mean with financial inclusion? I'm thinking here on really a payment method which is easy to use, as easy as cash. And for this, we need a strong role for human support. So you won't get, just because we go digital, doesn't mean that we kick out all the services from bank branches, for example, which helps you to use the payment method. So we still need human staff helping people to use the digital euro. We still need ATMs where people can withdraw the digital euro without having a digital device at home, because you in the end you have still a lot of people who don't own a computer, who don't own the newest smartphone, who don't have an internet subscription. So that's really the point where we want to look at. And the second topic, which is key for us, is privacy. Cash allows you to pay, to do transactions without being tracked and traced. And when you're only moving to digital payment methods, your whole life is in your bank account statement. You know which restaurant you are going to, you know where you're going to the supermarket, you know eventually which political party you're paying. I mean, a membership fee. I'm not talking of large donations, of course. And what we really want to see is that for online and offline transactions of a low value, we get full privacy, because we believe that otherwise we go into a society where you're completely, I mean, your data is theoretically available to whomever you give access to, and that's quite a dangerous situation, because I mean, when you look at also now the developments in terms of open finance, open banking, is that consumers are asked to give consent in many different occasions to their bank account statements. So part of the payment transactions of a lower value, which are not available, and where the data is not available, so you're not even tempted to give it out. That's the idea which we have. And then perhaps last point, and it was already mentioned, that we are really happy to hear that ECB and Commission are aligned there, is the fact that we have a public payment method which is easy to use, which is free of charge for consumers, and which is accepted by all, I mean, like cash, like legal tender, because that's something which we don't have currently in Europe. When you go with a digital payment method, you are never sure when you go, for example, on holidays abroad, that actually your card is working there. We have the issue with some payment schemes which are now getting abandoned. So, I mean, Maestro, for instance, is not working anymore at some point, and then you cannot use your national card abroad. So these kind of things will be solved with the digital euro, and that could be really an added value for consumers. So I think I will stop here, and letting some time also for the questions afterwards.
Thank you, Anna. So this was the perspective of the consumers, and I'm keen to get the perspective of our Member of Parliament, Paul Tang, as a representative of all people. What do you hope will come out of the legislative process for the digital euro later this year?
Thank you, and it's great to have this discussion. And in fact, I don't think the European Parliament has been already very active. A couple of weeks ago, we had a first plenary debate. And it was really interesting, because it was the first time that I could see, and otherwise other people could see, what position members of European Parliament would take. And I must say that, well, my first take on it was that there was a lot of skepticism among the members of European Parliament. Maybe on second thought, it is that members of European Parliament are now forced to make up their minds and start to work on it. That's why it's still more questions than answers from the contributions from the members of European Parliament. And in that debate, you see different perspectives, I think, and also in this debate. I think one of the perspectives is that of a central bank and the monetary anchor that Evelien refers to. And I think that's important, because let's face it, the whole discussion on CBDC didn't start with the fact that the cash is slowly but surely disappearing. No, it started all with Libra. So it was not disappearing cash, it was the appearing digital private money that forced us into this discussion. And I fully understand that the ECB and other central banks are worried by being taken over by foreign stable coins, right? That would indeed disrupt the financial system and monetary policy in that sense. And even though the Libra project has died, it's still not unthinkable that it could come in a form. And it's now interesting to see that we have this cooperation, this consortium of Apple and Goldman Sachs. We see another big tech company venturing, in this case with of all banks, Goldman Sachs as a partner, venturing into payments. So, and I think that was at least accepted by part of the European Parliament. Personally, by me, yes, we need, if only as an option, we need to have a digital euro to make sure that we do not end up with a eurozone where without a euro, so to say. That is fine, but that is still sort of abstract macroeconomic consideration. It becomes a bit more specific with a perspective that is missing from this discussion, and that is the perspectives of banks. Because when preparing the debate in the European Parliament, I looked at some of the position papers of banks, and well, they are pretty scared by the introduction of the digital euro. That's in a sense understandable. They fear that the digital euro will be a good competitor for deposits, which you can hold your money in the form of a digital euro, or you can hold your money at a bank account. These are alternatives. And they fear, apparently, that introducing the digital euro will diminish their possibility, the capacity to finance through bank deposits, through savings accounts. And in fact, you can see in the discussion from the communication from the ECB that the ECB is willing to go far to indeed protect the private banks by introducing this holding limit of 3,000 euro. It could be more, could be less, I don't know. Let's see what the ECB will propose. And I will come back to that, because introducing a holding limit, of course, has consequences for the user. But first of all, I'm not sure that the introduction of the digital euro is the real problem. I think there's already a problem developing for banks. You can see that very clearly in the US, where you see that the small regional banks, Silicon Valley Bank, First Republic, see the problem of a bank walk. Deposits disappear, and I think that in a digital age, the mobility of the savings accounts has increased enormously, and this put pressure on banks anyway. That is how I like to see it. So, but in all honesty, the digital euro can add to this trend of an unstable base from savings account and an unstable base for banking finance. So that's the second perspective, and that's not in this in this panel, but I think it's relevant in the debate on the digital euro. But it brings me to the third, because I'm thinking, why would you choose? And this was, I think, the main question in the European Parliament. Why would one hold the digital euro? And it's not that obvious, by the way, of introducing a new currency, given that most people are financial illiterate and also digital illiterate. So the question is, where to alternative for what in the first place? Is it the alternative for physical cash, or is it the alternative for digital private money? But the main question in the Parliament was, why do we want this as a user, as a consumer, as a voter? And the stupid thing is, in my initial answer would be, well, because it's very safe, right? That would be one of the things. If there's no more safe money, then holding it at account with the ECB. But this is exactly what the ECB does not want to do, because it introduces this holding limit. So the one absolute quality you have is sort of given away already from the start, and then you come back to all the elements that were introduced as part of this discussion. Is it fair? Are the costs for users fair? Is it does it maintain privacy? Where I would like to think that the main advantage of a digital euro, it's safe for the user, and that's the reason why they want to use it. And I'm concerned also that by putting the holding limits too low, the introduction might be very difficult. And that from the start, and that this will be a non-starter from the start, so to say. This is one of the concerns I have. If we introduce, I have some sympathy for the idea that that you introduce the digital euro and that you don't want to upset, and especially by the ECB. You don't want to upset the financial system. I have some sympathy for that. But then again, it should not be that it should not diminish the desirability of holding the digital euro. Apart from that, I think another consideration in the debate, which I think is the more important but not self-evident, can it contribute to access to financial services? Will it be inclusive? I don't think the digital euro is in itself a recipe for that. I think it requires an extra amount of effort. Like I already said, people are financial illiterate, people are digital illiterate. Introducing the digital euro won't be a walk in the park from that perspective. But the good thing is, if you introduce a form of public money, there's a public institute behind it, and it will have, I hope, a very different approach of trying to achieve inclusion. Because indeed, it's still the case that a surprisingly number of people for example, don't have bank accounts. I was a bit shocked to see that in some parts of Europe, there are still a lot of unbanked. But I don't expect the private institutions to take financial to try to achieve the broad financial access. I rather trust a public institute to do that. So that is an opportunity, but I don't think it's self-evident that that the digital euro will be all-inclusive, so to say, will help, will automatically lead to a broad access. I think it is just hard work to get to arrive at that. So I think I will conclude here, just try to give you an impression from the debate from the European Parliament. I think there are also very much the different perspective, and I think we should take them all into account. It's very clear that I don't think the digital euro should be here to protect the private banks. Far from it. I would rather see that we use this also as a way to raise competition with the private banks, but also I hope to see very much that the digital euro is used to broaden financial access and to achieve financial inclusiveness. Thank you.
Thanks a lot, Paul, for that very helpful overview of what the debate is like in the Parliament at the moment. Very interesting to hear, and we'll touch on some of these tensions elements a bit later in the discussion. So this leans very well into our next speaker, Tristan. What is your take on where the digital euro currently stands, and what is needed in order for it to be a true public good that benefits society and improves our money system?
Yes, thank you. Good afternoon. I will share a few slides, mostly to reflect on the main modality, which is currently planned for the digital euro by the ECB. As Evelien Witlox explained, the digital euro will mostly be an account provided by private intermediaries, and by private intermediaries, we mostly mean banks. So I'll try to see what we can expect from this modality for the digital euro, and what critics we can make to it, mostly to fuel our debate. So in terms of access, we can already note that if access is conditioned by intermediaries, users can be fenced off, which means users can be prevented from accessing digital euro services, depending on the terms, depending on the conditions that will be set by intermediaries. We have to keep in mind that banks and other financial institutions, they are selective towards their customer base, meaning that they can refuse to take you as a customer, as a client, if they think that you are not interesting enough from a financial perspective. So if onboarding for the digital euro follows the same procedures as for payment accounts, as it is currently planned by the project of the ECB, we can't expect greater inclusion if we follow this modality, because digital euro accounts will not be more accessible than bank accounts, which they should be, actually. One of the solutions that is considered is to have a mandatory provision of the digital euro by payment service providers. But even in that case, we can't expect to have universal access. Today, banks are legally mandated to offer accounts to every EU resident. But even despite these legal requirements, we know that they don't do so, and part of the population still face financial exclusion, as it has been said, and the digital euro won't change much of that situation. Regarding costs, it has been said already that the digital euro will be free for users. But again, if we rely on private intermediaries for the provision of the digital euro, they won't do it for free. Private intermediaries have to be profit-making, so the provision of digital euro services will have to be conducive with their business model. This could result in overall increased costs or indirect costs for users. We can look at what incentives would have private intermediaries to provide digital euro services to the people. The first would be a compensation or remuneration coming from the ECB or the euro system. Well, in that case, it will increase the overall costs compared to a solution in which we don't have a profit motive for the distribution of the digital euro. Another solution for private intermediaries would be to cross-sell their services. For example, in the case of the commercial banks, you would have access to free digital euro services only if you already pay for a bank account, for example. That would be another solution, imposing indirect costs for users. And the last one would be what is called by the industry value-added services, which would be developed by these intermediaries. But in that case, it would mostly rely on mobilizing and using users' data. Which brings me to the privacy aspect. If private intermediaries are involved in the payment and in the distribution of the digital euro, well, of course, they will have access to personal transactional data. And as Anna said, this data says a lot about us. The digital euro will not change anything on this front, and it will not improve privacy from this perspective. As digital euro transactions will be transparent to intermediaries, which will be able to collect this data and to monetize it at their will. The ECB has repeatedly said that it has no interest in monetizing payment data, which is actually true considering that it's a public institution, but at the same time, it does not offer users with an alternative, which would be more conducive to privacy. And as Jan said, well, it could set a higher standard for payments if it would be offering its own payment solution, as we might see. Regarding resilience, finally, the digital euro will be dependent on existing payment rails. Here, we can take a broad look at the payment system, which involves different types of actors, banks, card schemes, which are mostly Visa and MasterCard, but also acquirers who provide acquiring services to merchants, The digital euro, which is currently being discussed at the ECB, would be a digital euro scheme. And this digital euro scheme would only replace card schemes, but it would still be dependent on other actors, other private actors in the payment chain. It wouldn't provide an independent and separate payment system, which could be used as a fallback solution in the event of extreme events, and that other private payment systems are down, for example. So once we have pointed to these potential limits, what can we consider as other solutions? One of the main messages of the report that we recently published is that design choices don't have to be mutually exclusive. We don't have to rely only on one design choice. I'm not going into much detail here, but in the report, we conceptualize 4 main models. The ECB chose one of them, but we can find complementarities between models. A digital euro, for example, doesn't have to be provided only via private intermediaries. It could be offered directly by the euro system. As well, a digital euro doesn't have to be only an account, doesn't have to be linked to an account. It can be cash-like. It can have the same qualities as cash and to be transacted fully peer-to-peer and offline. So we really have to find complementarities between model. And what we call for in the report is what we call a public option, which would be feasible via the implication of public and non-for-profit intermediaries. It would broaden the scope of intermediaries with which the public could interact and access digital euro. We could have what we call an end-to-end solution, for example, through an ECB app, an app which would be developed directly by the ECB, through which people could directly open an account without relying on an intermediary. And we could also have Eurosystem smart cards, which answer to the point of Jan that in order to have digital euro, you need a wallet. These smart cards could be used as wallets, which could be fully anonymous and allow people to transact digital euro in a very universal way, as well as offline, which would bring more resilience as well if you can transact digital euro fully offline. So this public option doesn't aim to replace the solution that is proposed by the ECB, but to complement it. And the idea is really to complement what we can expect the market to provide, because we can't expect the market to fulfill all needs, and we can't expect the market to fulfill all policy objectives that are linked with the digital euro.
Thank you, Tristan, for sharing insights from civil society. And I think this transitions us very well into our next round of contributions from the panelists, where we'll dig a bit deeper into some of the aspects that have been mentioned so far and that are causing some tensions on the discussion about the digital euro. So coming back to you, Evelien, as Paul mentioned, and also Tristan, there seems to be a kind of trade-off between, on the one hand, ensuring that the digital euro is attractive enough for citizens to want to use it, and on the other hand, not making it so attractive that we step on the toes of the banking sector, who are scared about deposit flights. As we've heard also from civil society, they think the trade-off is too much in favor of banks, and there needs to be an option for people to access euros through a kind of public account that Tristan set out. Can you give us some insights into how the ECB has tried to manage these two tensions? There are these two seemingly conflicting interests, and is a public option completely off the table?
So that's a lot of things that you asked in one question. Let me try to be as precise as possible. So we have indeed, so we foresee that the digital euro is mainly a means of payment, where we agree with Paul that in order to be a good means of payment, which is easily accessible, it's important that the holding limit is not too low, so that for every transaction you need to top up, that would be really a problem. So we agree that the holding limit should be such that it would also still be a very good user experience. On the other hand, we also need to make sure, as was said before, that we have a stability in the financial system. So we have done some calculations on this and some modeling. We have always said that setting a potential holding limit, we will only do much closer to issuance. So, but from our modeling with data from the current stage, we came to a model where 3,000 euros would be not a problem for the banks or would not be a problem for financial stability, just also to be sure that we take both. And I think the financial stability of the banks is also a public interest for all of us, just to be on that side. But we agree there should be a sufficient room to just use it as a convenient means of payment. How then to access the digital euro? Indeed, we have said that the ECB cannot be the provider for the digital euro. So we need the distribution channel, which we think is the payment service providers. We think it's for the majority of people also rather convenient. They are used to work with the banks and they find that the channel. Having said that, we find digital financial inclusion a very important topic. So we have been working also with the consumer organizations on a deep dive on that. And a couple of things are already in our design. So for example, an offline payment solution, which could be based on either secure element in your phone or on a card. We already have foreseen in our design that there would be a digital euro app, so independent from your bank. If you want to have a further public approach that would not be on the euro system, I would say to decide on itself. So that would be really also a discussion with the legislator, with the member states on how far they want to go there.
Thank you, Evelien, for your comprehensive reply to my quite detailed question and long question. I'm keen also to hear from Jan. I mean, Evelien also mentioned the offline possibility for having digital euro, and she also mentioned earlier that the kind of balance between traceability and privacy would be something left to the EU legislators. I'm keen to hear your thoughts on just the balance between these two, on the one hand, privacy and traceability, and also any thoughts on this idea of a public account, if you have any to share.
Yeah, thanks. I mean, I think this is probably, if you want to pick one of the choices, which is the most difficult one, I think the balance between privacy and other matters is a really is a good candidate, basically. So I will not be able to give you today a final thought from our side here, even, because it's still something we're looking at. I mean, I think I think we need to strive towards a quite high level of privacy, and I think some of the technologies, and I think Evelien mentioned, indeed offline is something where basically indeed privacy is embedded in the design to a greater extent than some of the private payment solutions you have today, basically. And I think secondly, we will need to have a regulatory framework which makes it really completely transparent where data can flow, where it cannot flow, basically. So in a way, a digital euro is, we know in the digital world, in theory, we can design the systems all in a way that data can flow as we want it to flow, basically. So I think it's really the legislator needs to really kind of draw the boundaries here, basically what data can be looked at and what cannot. And that's also then for the trust in the system very important, that this is super transparent in the legislation, basically what is the situation. I think that's what we can and have to do in this area. But where exactly, let's say, the balance can lie here, certainly, I think the amounts, I think, Anna, you referred to large and small amounts. That is a trade-off which you always have. Of course, the bigger the amounts, the more maybe also the risk for money laundering and other matters. And then otherwise, secondly, I think the second element is indeed the technology, offline, online. It makes a difference basically how the data can flow. So I think those are just the considerations we're looking at. But again, I think even our commissioners haven't really come to a final conclusion on that. Secondly, maybe on the public, let's say, role also in the distribution of a digital euro. I mean, I think just 2 points on this one. I think Tristan, you've made a number of important points there. Basically, my first reaction would, however, be I think some of the challenges wouldn't go away if you do public distribution. I mean, even if you do public distribution, for example, onboarding in one way or another would have to happen. I mean, we can discuss the modalities and will have to discuss privacy, but at somehow you need to get this card. Somehow you need to basically, if you want to have larger amounts, you need to somehow identify yourself, etc. So, I mean, this will have to happen. Also, if you do it, let's say, completely cash-like, peer-to-peer, I mean, data can, if you want, again, that goes back to the previous point, data can always flow. I mean, even, and I think Paul has been working on this in the Parliament, for example, on the traceability of crypto assets. That's today, basically, I think the highest level of kind of anonymity we have. And actually, I think the Parliament is trying to track this down a bit, basically. But even there, if you want to, and that's what the Parliament has been doing, actually, you can establish a system where indeed larger amounts are being tracked and traced. So it's not that if you go cash-like, that you go basically peer-to-peer, that you exclude the problems in a way. So those issues will always be there if it's public, if it's private, depending on the system you take. And so in that sense, it's really then also a policy choice whether you think on the distribution side what's the right role of the private sector, of the public sector. And I think there you need to, balance a bit two things. I think on the one hand, I think it's inclusiveness, and on the other hand, it's, however, also, let's say, the acceptance and the adaptability for most of the citizens. And let's face it, I mean, many citizens, they also want to have something which is comfortable. And let's say the public solutions are not always the most comfortable. If we think back to an area where many banks were still public, actually, it wasn't particularly cheap. It wasn't particularly comfortable. So, I mean, that's a bit a balance one needs to take. So if you kind of put all your eggs on the public sector, you may cater for, let's say, the excluded, but you may lose the large a large bunch of the population. And that's where I think a bit the ECB is trying to, and I think that's broadly something we would probably also support on our side, to find a balance here, basically, to get on the one hand to have acceptability and usability by the large set of the population, and the other hand, actually then devise specific solutions for those who are financially excluded. And there can be a role for public bodies here, and we know this in some member states. The post offices, for example, I mean, they are in some member states, not in all, but they are really such an example of a public institution. But it's maybe also something where then one would need to look a bit member state by member state what really the good solution in a way is, because it's not really the same everywhere.
Thanks a lot, Jan. Yes, I think it's very important to also outline all the conflicting interests of end users as well. There is obviously the concern about privacy, but then there's also the need for innovation and seamless transactions that a lot of users want, right? On the note of privacy, Paul, I'm particularly interested, and I also saw a question in the chat about there's been a significant public backlash against the digital euro, especially in the Netherlands. There was a debate in the House of Representatives, and there was especially concern about privacy and state surveillance. And at the same time, there's been also a little bit of criticism about the technocratic nature of the process of the digital euro so far. And so a question is, how can the members of the European Parliament help ensure that there is a pluralistic debate, and how can we get European citizens on board with the digital euro?
Yeah, well, it's interesting to see that in the Netherlands, there was much engagement in the public debate on the digital euro. Though you could also say it was largely captured by right-wing populists, in all honesty. And they emphasize very much privacy out of fear of state surveillance, and then the example of China pops up. But it was true that it was one of the most attended debates in the Dutch National Parliament. Then again, I emphasize it was captured by right-wing populists because they emphasize very much privacy, and I think most people value privacy, to be clear. But on the other hand, if you look at the Netherlands, it's one of the most cashless economies in Europe, right? So, and that means that everything is traced and tracked already by private banks, and it doesn't seem to bother the average Dutch person very much. So this is, but generally, I would say that we have good reasons to maintain privacy. I think payment data are very sensitive, very revealing. I think we want to go towards a system where less and less sensitive personal data are available, and that includes payments. But of course, on the other hand, I'm also rapporteur on the anti-money laundering directive. It cannot be the case that once we have a suspicion that all data remains private. On the contrary, we need to make sure that we don't give a free pass to criminals or terrorists to finance. So this is where we have to strike the balance. But in fact, we usually do already. We already encounter this balance, because when it comes to physical cash, or when it comes to bank transfers, this is where we already have this trade-off. And I don't think the digital euro, in that sense, poses a new challenge or a new trade-off. It's part of the trade-off we already make. But it also depends on very much what mode, in what way the digital euro is introduced. Hearing this discussion, and is that you need different ways to introduce the digital euro. One of the ideas that I like, and that Evelien also put forward, is the possibility of offline payments. It will be different if you have an offline payment system when you have it through digital payments. But overall, I think the trade-off is there, and but it's sort of part of usual business.
Thank you, Paul. And actually, going on with this concern of privacy and offline means of payment, and I'm also curious to hear a bit more about your thoughts in terms of the design features that are needed to ensure that citizens kind of have this continued access to an anonymous means of payment, or at least something similar to a baseline privacy that cash has in the digital age today. Can you share some of the design features that you think are important for that?
Was that for me? I missed it.
Sorry, yes, to you, Anna. Yes.
No problem. Yes. So yeah, what do we need? We need for these offline transactions the possibility that we don't have the transaction data stored. Of course, then it depends. I mean, Evelien mentioned that we have the convenience aspect. Some people like it, especially for higher value transactions. You want to have the transaction data. You want to be sure that the payment went through. That's all fine. But we have lower value transactions where you want to have higher privacy, and there you should have the possibility that this transaction data is not stored, meaning that it's not available for you, but it's also not available for anyone else, which is the more important part of it. And that's something which we are currently, I think, at a technical level, very much discussing. How is that feasible? And it is feasible, but we need to be coherent throughout the whole design that you can have that, and that you can have this possibility to not store this data. And one important aspect there still perhaps is that, of course, it's important for us that, I mean, European Euro system is not having the data, but even more importantly is that also the commercial banks, should there be the intermediaries, don't have access to this data, because there we see more the conflict of interest of using this data for commercial purposes, and where it becomes really important. And that then if you get access for third-party providers via open banking, open finance, that there is no attempt to get access to this data.
Thanks a lot. And yeah, Tristan also mentioned in his presentation the use of smart cards, for instance. Is this something that you've touched upon at all?
Yes, I mean, we touched quite a lot on the card as a form factor. I mean, if you look at the recent space study from the ECB, which looks into payment attitudes from users, you see that next to cash, especially for e-commerce payments, a card is really the majority form factor used for payments. So for us, it's really keen that consumers can stay with what they are used to, because payments is really also something where people like to keep their habits and don't want to change every 5 years in a different way. We see, for instance, that mobile payments are still really used by a minority. I mean, that's all over the place when you discuss payments nowadays, but when you look really at what consumers are using on a daily basis, it's cash and cards. So that we should also keep in mind that when we look into implementation, that we look on what people are actually using and not putting them something on the spot which they have to use. And I think that will not make the digital euro very successful.
Thank you, Anna. And Tristan, there's a kind of last topic that we haven't spoken too much about. It's the resilience that you mentioned in your presentation. So how do you see the euro increasing, the digital euro increasing the resilience of the payment system in the case of outages or cybersecurity attacks? And what are some of the issues that you see in the current design or the designs that are being leaned towards?
Yeah. So regarding resilience, the main factor to increase resilience is, generally speaking, diversity. So if the digital euro brings diversity into the payment landscape, it would indeed increase resilience of the payment system. And we see two ways of doing that. The first is to have a payment solution which is fully independent from existing ones. So which is not dependent on the private systems to be up and working, to be able to work for the digital euro. And the second one is about the offline solution. If you are able to transact digital euro fully offline, you are protected against the case where internet coverage or the electricity supply go down. Which allow in the same way to have a backup solution, a fallback solution, to be able to pay even in these situations. And about diversity, and to answer as well to Jan, who called to not put all eggs in the same basket. We fully agree with that, and but when we look at the work done by the ECB, it looks like all digital euro eggs are put in the same private sector basket, and it's a strong difference when you look at the work done by the Central Bank of Sweden, for example. The Riksbank always considered private and public intermediaries from the very beginning of their project. It's something that we don't see in the case of the digital euro. And we call for diversity to find which complementarities could be leveraged between the public and the private. And again, we don't call for the public sector to take all tasks, but to provide its own solution in complement to what the market will provide.
Thank you, Tristan. I don't know if Jan or Evelien want to reply to Tristan's last remark. And if not, we are well on time. So and I see there are a lot of questions in the chat. So I would suggest that we move on to the questions in the Q&A, unless there's anything, Evelien, Jan, that you would like to add following the interventions of the other panelists.
No, very briefly. So I think so. We agree on that you need multiple solutions and that they will increase the resilience. That's also the reason why we say the digital euro will add and not replace, or not cash, but also not necessarily retail payment solutions based on, say, commercial bank money. On the reusability and of the system, we have on one hand the offline one, which really increases the resilience as well. but also on the infrastructure for the online, we will have a lot of separate rails. So but we would go too much into the detail, but I think we will be more independent as Tristan currently thinks. So we might need to be clearer on that going forward.
Yeah, and maybe just to add, if I may, indeed, I mean, my impression is, at least, Tristan, that the ECB is looking, as much as other central banks, at all the different options, including also the public side, basically. I think that's also the case for us, basically. So I think I wanted to just reassure on that part as well. We have also been in touch with the Swedish colleagues, and I think Evelien and colleagues as well. I have the impression that this is, I mean, there's nothing excluded too early, basically. I have the impression.
Thank you. And I actually, there is a final question from my side. I mean, especially going through all the different positions and what has been said today, the digital euro is quite technical. And as Paul pointed out, you know, it's people, a lot of people are financially literate, also digitally literate. And as I mentioned before, there was a question to QA, which is very important. But how do we get citizens on board and clarify what's going on and what the benefits are? And I'm actually keen to hear from all I think we all have a different role to play in this, civil society, even the ECB, and of course, members of parliament. So an open question to the panelists, whoever would like to answer, but how do we get citizens involved in this and get them to understand what it's about, and yeah, hopefully get them to actually use the digital euro one day?
Maybe I can go first, and then others to add. So what we considered, we are currently in the investigation phase, is that it's very difficult to go to the general public. So I'm not talking about the direct stakeholders, so the banks and the consumer organizations and the merchants, which we have involved from the beginning, but general public is very difficult if you don't have an idea how it's going to look like. So if you look to the beginning of the investigation phase, we had a concept of a digital euro, but not how it would look like. So we believe that more towards the end of the investigation phase, also when there's a draft legislation, when we have now done together with the direct stakeholders, so being the consumer organizations, the merchants, the banks and the non-banks, we have jointly worked on all the designs, so we can be more precise. So if we would explain why digital euro is important, really one of the first things that people ask, and how would it look like? So and let me be clear, we cannot, we don't have a full design with the UX and whatever, but we can be more clear. So I think what you have seen already in the past half year is that in general, I think communication has gone up, which is logic, because also the draft legislation is coming and it's necessary. But we will be more and more in a better position to explain. Next to that, I would just want to say is that we find the communication very important. So we have set up from the beginning the interaction via the ERPB, where every design decision has been discussed. Everybody was able to contribute. Mr. Panetta, the board member from the executive board, goes to the European Parliament roughly every 2 months to update, to keep everybody updated. We try to go to as many conferences like this and seminars to answer questions and to present our views. As said, I think we already have done a lot of communication, but I agree with reaching the general public. There needs to be more, which needs to be an effort from all of us. So the ECB needs to take a role, the Parliament, the Commission, but also consumer organizations, merchant organizations. I think we all have a role to make sure that people understand what's going to be discussed. I stop here, and maybe others want to join our compliment.
I think the what is important is that we try to facilitate as much as possible, let's say, a well-informed and good debate on this. It is a significant step. So in a way, it is good that there is a debate, and the debate means that there are pros and cons for the arguments. I think we just need to make sure that let's say people have all the information on the table. And I think maybe the first element, what is there important, is basically the digital euro will not be imposed on anybody. Basically, it's a choice. It's an additional choice. But everybody to decide whether they want to use it or not. And the second one is maybe, yeah, you can discuss what are going to be the benefits of the digital euro. You also need to think what will be the cost of non-digital euro, basically. So, I mean, that will be a situation where then definitely in the digital, we're not going to move away from digitalization. I think that is a trend which is there. So basically, then it would really mean without a digital euro, that's what people have to realize, that indeed all eggs are in the private basket, basically. And then, well, we don't know whether that private basket will be our local cooperative banks tomorrow, whether it will be Apple Pay or whether it will be stable coins. That nobody knows because we can't predict the future. But I think that's just what one also in the discussion needs to, let's say, think about. What is the alternative, basically? And then I think you need to have an open debate, I guess.
I sort of, because I think that was one of the questions in the debate in European Parliament, why would people want to use it? And they're not going to use it because it's not imposed on them, right? Because they have, so what is the positive reason for choosing the digital euro? That's the question. And I agree with Evelien, it depends, of course, very much on what are the actual solutions in practice. So what then there's the time to explain. I still like to maintain that I think that it should be one of the safe options, that is one of the attractive elements. And I'd like to think also that it's not just it should not be an alternative for cash, but also for private commercial options that are already out there. And I very much hope and I like to think that public institutions treat our data better than private institutions do, for example. So I can build a case. I'm not a marketeer after all, but I can think of some characteristics of the digital euro which could make it a very attractive option. But that's and that should be part of also the political debate and then also of the public debate.
Yeah, I believe, I mean, what is really important here is also, I mean, communication or general communication from institutions, organizations is one point clearly. And we want to have something which brings an added value and that will make communication easier. But I think there is another point, which is really this onboarding of individuals, people individually. And there we really need a strong network of human interaction. And I think otherwise we won't get it. I mean, people, when they start using a new payment method, and it's something which we see often with payments, that people are, especially moving digital, afraid of making mistakes, afraid of fraud, afraid of something could go possibly wrong with their money. So we really need some system, some network of intermediaries which are close to the people, helping them to get at first the digital euro account, but also then to use it with the digital, with the different factors, like how do I use this card? How do I transfer this commercial money into central bank digital money? I mean, it's a whole new thing. And we shouldn't imagine that people will, I mean, of course, some people will be tech savvy and will be quite easily onboarded, but others are not. And if that's our main target group, we should really pay attention that we get them all on board.
Yes, and to add on what was said, maybe a first step for larger engagement on the topic could be more transparency on the process itself. For example, the work done in the market advisory group could be more transparent. We have only summaries of those exchanges, but more details could be useful. The same as for the rule book development group. We don't have any material coming from these working groups, and such transparency would allow to really evaluate what options are on the table. I'm happy to hear that they are all on the table and that none are excluded. But from what was publicly published so far, nothing allows to guarantee and to see that, for example, public options are being considered. And on the communication aspect, I think it's not only about explaining to people what it's about and how it will be, but also engaging at early stage with them. As part of my research, I've been conducting design workshops with regular people. And when you take the time to sit down with them, actually they are quite receptive to the concept and they understand very quickly what's at stake, and they're able to think about the ideal means of payment and how it would translate for the design of the digital euro. So of course it's not something that the ECB can do on its own. I think national parliaments or even national central banks would have a role to play in engaging with the public. We need really a broad network to really engage with the public and not only communicate with them in a distant way.
Sounds like we need a strong collaboration between all the partners and stakeholders in this panel today. I'm going to start moving to the questions in the Q&A. There's a couple that are very, very popular, but I've seen a kind of clarification question that's maybe worth addressing first. So someone's asked, the majority of money in circulation in the EU is currently money issued by banks as opposed to central bank money. How is the digital euro thought to be constructed? Will it be central bank money solely, like cash, and therefore replacing the current bank issued euro, or will it be added to that? It might be worth just clarifying the kind of status that the digital euro has in relation to cash and bank money. Evelien, I see that you'd like to answer.
Yeah, so indeed, it will be like cash, a liability to the central bank. So in that sense, it's the same in nature. So the form is different, but its nature will be the same. I forgot the second part of the question.
I think it's, and will it therefore be replacing the current bank issued euro? So
no. So it will complement. So it will complement cash on one side. So it will not replace, it will complement cash. And on the other side, you will still have the bank-owned liquidity on base of which there are what we call commercial bank solutions, and they will remain there as well. As Jan has said a couple of times, the digital euro will be an additional choice and not replacing anything else.
Thank you, Evelien. I think this also answers the first question that was most popular, and maybe just going to the second question on financial inclusion. So someone has asked, isn't the answer to legally oblige the acceptance of cash without additional fees? Instead of push people, we will never use the digital payment methods to do it. So I think this is about the acceptance of cash. Yes, Jan, I'll let you.
Yeah, no, I mean, I think that's a very important part of the answer. So the answer is actually not, the digital euro is not the answer to all problems, indeed, and also not the full answer to financial exclusion in a way. And maybe also this, I think, Anna, you mentioned also a couple of times that you need to make the digital euro also kind of accessible to people who are less literate digitally. I fully agree. But I think we also need to be, I mean, for some of them, or maybe even a large part of them, it will also simply remain the case that actually good access to cash and preserving it is the better option, basically, to get them what they want, basically. So we just think it's not going to be, neither of them is sufficient, because we'll have these people who will not be very digitally literate, but we'll also have people who will be more and more digitally savvy, and they will very soon, they will not even consider anything which is not digital anymore. And in that sense, for them, we also need to have a digital option. So that's why we need both, basically. But we agree, really a strong and good acceptance, mandatory acceptance of cash is also indeed part of the answer. And that's why also from the Commission side, I think, Vicky, you mentioned that, I think we will also come forward indeed with a package which has both, let's say, a legal basis for the digital euro and also indeed, let's say, some clear rules on the acceptance of cash, actually.
Thank you, Jan. Anna.
Yeah, perhaps to add on this, I mean, fully agree that it's complementary. We have some groups who will never move to the digital euro. They are like, I mean, they paid with cash their whole life. We won't move them. That's for sure. But we also have, I mean, the group who are currently excluded, if you look at these studies, which I mentioned in the beginning, is very diverse. You have, for example, also people with disabilities who, due to the fact that the EU Accessibility Act is not yet implemented, can simply not use all the ATMs which we have, or have really trouble with the commercial bank interfaces because they are constantly changing. There are small font sizes. You cannot switch on a listening mode where you can listen to the different things because there are so many advertising in between, which makes the thing completely screwed. So these are the kind of things where we were thinking that you can create a public payment method, which is way more inclusive than what we have currently with private payment methods. And also thinking that, I mean, we are moving more and more to a digital society if we want it or not. And you have some shops which are disappearing, or which when you go, they simply refer you to, but I don't have your size, you just need to buy it online. Or, I mean, this is reality. Or if you go to public transport, I mean, go to Brussels. I mean, you can't use a tram or bus anymore and buy your ticket on the bus and the tram if you don't have a payment card. So it's something also where we need to accompany people to be part of this digital society, because if they're completely kept out, they will be kept out of a lot of services from our society, and that's a real problem. So it's a bit of everything. I mean, that's the difficulty, that we cannot say, okay, we go in one direction, we only take digital euro, or we only take cash, because it's so complex that we probably need both.
Thank you, Anna. So there's quite a few questions about the kind of current financial instability that we already see in the banking sector today, and some people are saying they're missing a bit of a conversation on this. And I guess this stems from, you know, a hope that a digital euro would solve some of these financial instability questions, balanced obviously with also the financial instability that a digital euro could cause for the banking sector. I don't know if this is something that some of the panelists would like to speak about. Paul, you already mentioned it earlier today, but there is a question about the role that digital euro can play in increasing financial stability.
Shall I try one more time? Yeah, I think it could have that role, right? What we see is that bank deposits becoming more mobile, rather than we see bank runs, we see bank walks, and that shows that the current system in itself may not be stable. So look at, for example, the deposit guarantee in the US is higher than in the EU, $250,000, and still it doesn't prevent this type of bank walks. So topping up the deposit guarantee won't help that. So it shows that we probably have a problem, and this problem only becomes bigger in a more digitalized world, because that's one of the reasons why we see this bank walks. It's easy to switch. All the more when the capital markets are more developed, because money market funds are an alternative to bank accounts, and this is exactly what the EU wants, the capital market union. So yeah, I think that's already a tendency in that direction, and I think the digital euro can help can accommodate in a sense that tendency, and provide an alternative that is indeed safe, because what you see, why do you have this bank wall? Because the account holders are looking for safety, security, and it's not provided by the private banks. Of course, it's not necessarily that we have this discussion because of digital euro. I recently stumbled across the Chicago plan, which is, I think, from 1933 or something, which goes in a sense in that same direction, requires that that bank accounts have a 100% coverage capital reserve requirement. So in that sense, the discussion is not new. But then again, I think it's worth having this discussion. And one of the great the great lure, one of the appealing ideas of the digital euro is that we now introduce again public money, whereas currently it's only private money. And that opens up opportunities, if not fantasies.
Yes, go ahead, Jan.
Yeah,
I'm not sure that the Commission and the ECB very much like this way of thinking, but let's try on this one. That's.
I was just coming in. I mean, I think just one thing to put in perspective what's happening now in the US. I mean, we haven't seen our citizens in Europe, and I think, let's say, I mean, those who have more than 100,000 on their bank account, they're probably, I would say, not the majority, certainly, probably rather the minority. I mean, none of our citizens has lost any of the deposits in the protected by deposit insurance now, not even in the big financial crisis 2007, 2008, basically. So, I mean, the deposits in our private banks in Europe are safe. I think that's very important to stress. And in that sense, I think from our side, we would like to keep these two discussions a bit separate in a way. I mean, there is a discussion now from this what's happening in the US to see how you can supervise banks better and what lessons do you need to take on this, to draw on this. But let's say from our perspective, the digital euro will not necessarily be will not be the answer to this. It will not solve those problems. And I think in a way, to the extent, let's say, we also luckily have in Europe quite good deposit insurance, but I think also overall strengthened our banking supervision quite a bit, have seen our banking supervision look precisely at all the risks which now have been actually causing troubles in the US. I mean, I think one can overall reassure people that even without a digital euro, even today, really their savings in Europe, whether they are in cash under their mattress or whether they are in a private bank account, they are really safe, basically. So that's probably luckily a problem we don't need to solve in Europe, I would think. But I mean, it's of course a discussion. So I see indeed, Paul, as you said, we're probably not 100% on the same line.
Yes, then I'll head over to Martin. So I also heard this morning on the Belgian Financial Times that Europeans are not worried about banking instability. Still need to read this article in the report, but Anna, go ahead.
Yes, no, I mean, this financial stability has been in the discussion all over the place. And I mean, I'm from a consumer perspective, not quite sure that actually people will empty all their bank accounts and put it to the digital euro account, because I mean, first of all, it's not meant as a saving account. So if we in the future hopefully get more interest rates on our saving accounts, it shouldn't be very attractive to move all your money to the digital euro account. So that's the first thing. And second thing is also when you look at how people actually want to use these digital euro accounts. There has been this very recent study from the ECB on digital wallets and testing how people want to use it. And one of the aspects, and of course, Evelyn can tell you probably more on this, but one of the aspects was that people want to use the digital euro accounts as sort of a prepaid, similar to a prepaid card where you can top up money, and you have that as if you top up, like you put cash in your physical wallet. So it's something where you are apart from your commercial bank account. You feel more safely to use it, perhaps also digitally, because you are not afraid to move accidentally 1,000 euro instead of 100 euro, because you put a limited amount in this wallet. So it's something where people really want to use it like cash and not like a saving account. And I think that's really key in the financial stability debate, and has been a bit overemphasized perhaps on the bank side, this aspect that people will all run with their money away from them, which if there are attractive interest rates, I wouldn't believe that it's happening.
Yes, and to add to what was said, Paul mentioned the deposit guarantee. Actually, what happened in the aftermath of the SVB episode in the US is that the Fed guaranteed 100% of deposits, so even above the deposit guarantee limit. So today you have proposals in the US saying if the Fed guarantees 100% of our deposits, what's the point of having commercial bonds being the intermediate for our money? We could have directly accounts at the Fed. So you have such proposals that exist. and which actually connects to a long debate about the division of banking activities between, on the one hand, the activities linked to deposits and payments, and to the other end, regarding investments and more riskier practices. So there's really definitely a connection. If you think of the digital euro in the long term, it could be also a way to discipline commercial banks, even in the situation where people don't move all their funds to digital euro accounts. The existence of this safe digital euro would also be a way for commercial banks to be incentivized of being less risky, more prudent, also more attractive to consumers. And why not an occasion to lift public guarantees on commercial bank deposits if you have this safe digital euro solution available.
Yeah, and perhaps just one point to add, because I think it's quite interesting, this debate, is the fact that as a bank, I would be actually nowadays more afraid of big tech and what is happening there than the digital euro. I mean, you look at this Apple, Goldman Sachs initiative, 4% interest rate on a saving account. That sounds quite attractive. I mean, I'm not going in this direction, but I mean, it's if I would be afraid of deposit outrun, then these are these kind of initiatives where it's probably more of a risk than digital euro, where I mean, it's just the current account. It's not giving you anything.
Thank you. There's also a question for Evelien. There's a question who said that the calculations of the ECB has shown that a holding limit of 3,000 euros, according to the calculation of the ECB, are no problem for banks or financial stability. Has this study already been published?
Yes, we may. We in one of the speeches that Fabio Paletta made to the European Parliament, I don't know by heart and at what date, there was a reference to this study. I do it by heart. I think it was November, but I don't know exactly. And there was also a link towards the study that was done. So this is available indeed.
Thank you, and that's also something that we can find and send with the thank you email after this panel. Sorry, I'm just going through all your questions. There's quite a few. Well, I think this one is more of a statement. Someone says, oh, I would move all my money to digital euro, but only if it's fully anonymous as cash. Will the slides be presented, distributed? I see you're voting things up. Yeah. Will the slides be presented and distributed to the participants? Yes, we will share everything. There is one that's been upvoted. Sorry, it just keeps shifting up. Cash is peer-to-peer, no intermediate, provides high autonomy. Will the digital euro have exactly the same features? I think this has already been discussed with some of the offline version of the digital euro. Oh, here's one that hasn't been touched upon yet. Why does the ECB understand the digital euro would never be programmable? Aren't there potential benefits to be gained for DVP of tokenized assets through programmability? And I think the ECB has quite a strong position on this. So Evelien, I hand over to you.
Yeah, I think it's an important point. Earlier it was referenced the discussion in the Dutch Parliament, which was about privacy, but also very much concern about programmable money. And we need to make a difference between programmable money and programmable payments. Programmable money would be money where we would issue a digital euro, and then we would say you can only spend it on something or only somewhere. So we put a limitation in the coin, and that means that if I would pay to Vicky, this limitation will stay. So for example, I don't know, let's take an example. We put in the coin that you can only use it to buy shoes. And then I pay Vicky, and then Vicky can only use it to buy shoes. So everybody that gets this coin can only use it to buy shoes. That would be programmable money. This is not something the ECB is planning that we're going to do, because it would be not issuing money, it would actually be more like a voucher. So this programmable money is not in the plans of the ECB and in the digital euro. We did talk about programmable payments, and that would mean that you could say, I want to do a payment, but there needs to be used a certain trigger, and then this payment can be done. So we call it now conditional payments, also to avoid the confusion between programmable money and programmable payments. So these conditional payments, and there we do see that there is room for innovation. Also was confirmed by the market that they see room for innovation, and that we have said we will make sure that the digital euro could connect to that, but the programmable features or conditional payments, we will leave this to the market to develop these innovative services on top of the digital euro. I hope I've been clear enough.
Yes, thanks a lot. And there's also a question for Evelien and Jan on how will the digital euro be introduced in the financial system, and how would the quantity of circulating digital euro be determined?
Shall I go first? Jan has said a couple of things already. So the first thing that needs to happen, so there's a lot of preparation. So this investigation phase is we do all kind of preparation to think about the digital euro. If we would go to a next phase after autumn, we would still be in a preparation phase, because there first needs to be an adoption of the legislation before the ECB could consider to determine or to decide to issue a digital euro. So I think that's important to understand. So, and then there will be, so first we need to see an adoption of the legislation, assuming that at some point there is a legislation and it's adopted. Then the ECB can decide to start issuing a digital euro. But of course, between saying, okay, we have the plan to issue a digital euro and the real issuance, there is time. Even though we have done preparations, we probably need to have some time between us saying we have the intention to issue and then the real issuance of the digital euro. And then the digital euro will be issued. And then we need to see how the rollout will be done. That is still something that we are looking into and forming first plans, so this could be done. Anything to add from you?
I have nothing to add, I have to say.
There's also a question again to Evelien and Jan. If the decision is made to proceed with the digital euro, regardless of which use case will be prioritized, is a simultaneous rollout across the Eurozone expected? And if so, is any support foreseen for intermediaries to support to best achieve this goal?
I think so. The rollout indeed would be following a decision. Well, I've already said that that will take some time, and what will be the preconditions. Actually, how this would look like is still something we're working on. So we have been focusing more on the design. And then the next focus would be more on how a potential rollout could be done and what could be timelines and what this would involve. But yeah, it's a currency. So of course, we have always said the digital euro, when issued, should be widely available and widely accessible in the Eurozone. So there might be some, I don't know, I'm not going to philosophize, but the idea is, of course, that it's roll out through the whole area in all Euro area countries.
Thank you, Evelien. So unless there's something, Jan, you want to add, okay, I will suggest that we wrap up here before handing over to Wojtek for concluding remarks. Just want to say a big thanks to our speakers today and also our excellent audience. Thanks for helping me upvote questions. There were a lot of them there. I hope I covered most of them. It's been a real pleasure moderating this event, and we will be following up with a link to the recording, the slides, and a copy of our position paper that will be out next week. And on that note, I'm going to hand over to Wojtek.
Thank you, Vicky, and thanks to all for this very rich event and for the discussion. I won't have a long summary, but my main takeaway would be that there has been what I heard was a kind of positive message about this public option that Tristan talked so much about, because what I heard both from Evelyn and Jan was in a way that at this stage none of the options were excluded. So this is a very positive message. We are really waiting for the outcome to see how this digital euro will look like. I think that the point raised by Tristan about the diversity is a very important one, and I mean, in a broader perspective, the ECB does an excellent job in fighting the fragmentation of within the eurozone. But this is a part of it actually, and I think that the public option should be seen as a part of trying to gain a more coherence in the eurozone, because the fragmentation is not only geographical, it's also social, it's also about inclusion, exclusion. It's also about this new kind of money, that private money, that stable coins, etc. So I think that there is a positive message to convey about what the public option should be about. And it's even going to what Jan said about the public options, monetary options being very very uncomfortable for the user, etc. There was a strong point made by Anna Martin just before about what does it actually mean for the users to use all those devices, commercial devices today. I'm taking this away from this debate because it's a very important point that maybe it's very simple devices not changing every month and being widely used because they are not overloaded with with commercial interest. Maybe this is actually value added, some sort of slow, what do you say, slow digital evolution, and not because we are living in a world where this digital evolution going faster and faster. But actually there might be a case for slowness and simplicity. At least that is a point that I would stress. So and I truly hope that this debate about the public option and what comes out of it will continue. And the other point that was made, which seems where we have not done sufficient work on the civil society side, is about the wider implications for financial stability and for the banking model. This was stressed by both Paul Tang, but also by others. And this is, I think, a very vital point. I think that the fears are exaggerated for the universal banking model, as we know it in Europe, are quite exaggerated. But still, we need to talk about it, and in a wider perspective, we all know that it's not loans do not come from deposits, but deposits are being created by loans. So from that perspective, we can always ask ourselves what banks have and the financial system has done with this capacity to create deposits by loans. So maybe a sort of a situation where this deposit could actually migrate would be a very interesting option for also from the standpoint of the financial stability. But anyway, this is something that we should talk about later. For not only this year, but also the next year and in the succeeding years, because these issues won't go away as we see the financial system is being transformed quite rapidly, and we don't really know where we're heading. So, but for the moment, I think that we have put it much more insight into the 4 dimensions that we've been discussing. And so I only add to what Vicky already said. Thank you for your time and for your inputs. And I hope that we will also, Veblen Institute will also send a message with a link to the report that I mentioned in the beginning, this is only a small contribution to the debate, and I hope that we'll continue to work on this subject with Positive Money Europe and with others, because there is a whole group of civil society organizations and think tanks interested in these matters. So thank you once more, and for today, that will be all. Thank you also for all the practical organizing work that has been done. And once more, sorry for the practical problems the technical problems we had in to start the discussion for some panelists.
Thank you.
Thank you.
Thank you.
Bye.
To be
Thank you very
continued.
much.
Bye-bye.